Ladies and gentlemen, Greg McCloskey from ForexLive.com. I want to take a quick look at the euro versus sterling, so sit right there. Let's start the focus by looking at the hourly chart. And when I look at this chart and go back this week, we got moved outside of this trading range. We actually moved outside of it last week at one point as well, but it was quickly reversed and the market moved back into that range. Now, in trading this week, you count 1, 2, 3, 4, 5 trading days. That was right here. The high price on Monday reached up in above the 100 and 200 hour moving averages. That's the blue and green lines in this chart right here. And the market could not sustain momentum to the upside, started to rotate back to the downside. And by Tuesday, the price was breaking outside of this box right here once again. And this time the momentum continued to the downside with the first move down to around the 86.25-ish type level before rotating back up, falling short of this low of the swing area near the 86.59 level and starting its rotation back to the downside where we finally bottomed in trading yesterday. We have seen a rotation back to the upside in trading here today, currently trading at 86.02. The falling 100-hour moving average is starting to catch up with the price currently at 86.17, and we will look for that moving average to provide some resistance or a level to lean against for sellers if the sellers are to remain in control. We want to see the price stay below that level and rotate back to the downside on the first test at least. If we move above that level, then all bets are off and we start to look toward the 38.2% retracement, which would really be another test. Really, this area right here is our resistance levels that would need to get through if the buyers are to show that they mean business on the move to the upside here. By the way, if I were to look further back here, this is just of the last leg to the downside. The euro versus sterling has been moving to the downside really since April 24th thereabouts. So there has been more of a trend to the downside. So the buyers need to prove themselves that they can get above both the 100-hour moving average and stay above that level, and the 38.2% retracement of the last move to the downside. Those are the minimums, folks. They'll have to prove that they can play in this game ante up at the table. Let's take a look at the daily chart. And what gives the buyers some hope is that the price lows this week came down into this swing area. The swing area was defined initially by some ceiling levels through here. I'll outline all those levels. We did have a little break above here and got a little messy through here and then reestablished resistance here, moving to the downside. And then once we started to move above that level, we started to see buyers. We moved a little bit below the level here, but then found support against the rising 200-day moving average and then reestablished support here before moving to the upside. So we are returning back to this swing area, which we just did a pretty good job of holding support or resistance over time. So that low comes in between 0.8559 and 0.8600, so around 41 pips within that area. But the low price this week came down into toward the low of that and found support buyers. So there is reason to think that, well, maybe we're due for a correction of this move that took the price from here to here, and we will see. But the first things first, from the hourly chart, we need to get and stay above the falling 100-hour moving average to prove that the buyers are taking control and then get above the 38.2% retracement. I hope this helped you in one way or the other. My name is Greg McCloskey. Good fortune with your trading. Bye-bye.